Hi, my name is Pari, and I will be going to give an investment pitch on the Auckland International Airport Limited. Well, first, I will start with the overview. Well, if you talk about their market dominance, well, they hold a very good position in the market as it is the primary lead to New Zealand. Also, if you talk about the growth passenger rate, well, the passenger numbers are increasing day by day. Also, they earn revenue from the various resources as well. They earn revenue from the concessions, car parking facilities, also the property leases. And if you talk about the infrastructure expansion, well, they are investing heavily on their infrastructure. They are accommodating large aircrafts, and also they are increasing the passenger capacity. Well, now we will talk about their summary by the why should we buy the recommendation for their shares. Well, if I will just give a brief summary, well, we should buy their share because they hold a very good market position. Also, well, they have a very consistent revenue growth. Then passenger numbers are increasing. They have a very effective cost management. Also, as I earlier said, they are increasing their passenger aircrafts, and they are increasing their positions for the future growth as well. Well, there are some reasons that the stock market may be not evaluated properly, or why the market is wrong. Well, as we know, during the COVID-19, there were a lot of travel restrictions, and because of that, the passenger numbers were well, they were reduced. So because of that, the stock may be not priced to reflect the future rebound and return to pre-pandemic levels of the passenger traffic as well. Well, secondly, the underestimation of the long-term growth. Well, they are underestimating the long-term growth as well. If we talk about, well, if we talk, um, well, if we talk about, well, as we know, it is the gateway to the country. Also, well, its industry is expected to be rebound given its attractive natural landscape. Because of this, the stock may be undervalued and falling the account for the company's strong position and the growth aspects as well. And also, if you talk about their infrastructure investments and expansion, though they are investing heavily in their infrastructure, well, they are focusing more on the operational efficiencies, and also they are committing for their future growth, but it does not have the positive impact. It does not have the positive impact on the company's revenue. Well, there are some key points that should help to correct the stock price include the earning releases, the infrastructure development, the tourism, and the economic growth. Well, if we talk about their valuation, as we know, their valuation is based on dividend discount model and the capital asset pricing model. Well, they also assume a very constant growth model with a dividend growth rate of a 5%. Well, let's proceed with their calculations. Well, if we talk about the dividend growth rate assumptions, well, to assume a constant growth rate, well, as we know, we need a consistent historical growth evidence. Well, as we do not have access to the real time or historical financial data beyond the September 2021, so we need to calculate the dividend growth rate assumption. So we should use the sources like the annual reports, the financial statements. Also, we will talk about the cost of shares. Well, to estimate the cost of shares, we can use the CAPM model, well, which considers the risk-free rate of the return. Well, as we know, to have the excess of these, we should focus more on most of the up-to-date data that are risk-free. Well, if now we'll talk about the market risk premium. Well, as we know, the market risk premium reflects the additional return investment expect for taking one risk of the investments. Well, if we have the historical data or the market research, we can determine the market risk premium. Well, moreover, we'll talk about the beta. Well, the beta measures the sensitivity of a stock's return. So if we have if we have the risk-free market, risk-free premium as well, we can apply the CAPM formula to estimate the cost of shares. Well, also it is estimated that their value derived from their valuation model is higher than their current price. Well, it suggests that the stock may be undervalued. So it indicates a potential buy recommendation. And if we talk about the investment risk, well, every investment has some certain risk. So they should focus more on these risks to have a future growth rate. Well, first factor is the macroeconomic factors. Well, as we know, economic fluctuations and global events can impact the air travel demand. So if they have to focus more on their revenue, their growth, so they should focus more on the economic factors, because the decline in economic conditions can have a very negative impact. Also, the regulatory changes. Well, changes in any regulations or any political landscape can impact the whole industry. So they should maintain a very good relation with the regulatory authorities. Also, the main aspect is the competitive landscape. Well, if they want to avoid the competition, they should focus more on the customer experience, their needs, and innovations to stay ahead of their competitors. Well, in conclusion, I can say, well, the AII presents a very compelling investment opportunity. Also, it has a very strong market position, and the proactive risk mitigation strategy make it a very attractive long-term investment option. Thank you.